Charlotte McLeod with investingnews.com, and here today with me is Don Durrett of goldstockdata.com. Thank you so much for being here. Great to have you in person.
Yeah, Charlotte, we did this last year in person, and it was my first, no, it wasn't my first one in live, but first one with you, and I really enjoyed it. It was fun. So I look forward to coming back and doing it again.
Oh, well, good. I'm so happy to have you. And that interview we did last year, it's one of the ones that throughout the year, I think people kept watching it because we would continue getting comments on the video of people kind of following what was going on.
That's amazing. Yeah, I do a lot of podcasts, but yeah, people are paying attention to me because my thesis is held. My thesis has always been to focus on the future gold and silver price. And I wrote my book 2010. I just came out with the 12th edition.
Wow.
It'll be out in a week. So I keep updating it because somebody told me, keep your book up to date because when the bull market comes, people don't want a book that's up to date. So I keep updating it. But in that book, I mean, all the way back then, I mean, it's a long time ago, I had a style, because I developed my style, I started buying juniors in 2004. So from 2004 till 2010, I was learning until I wrote my book. I'm a writer, and so I had written several books before that, and so there wasn't any books on the that you could buy. None, zero. I bought a couple, they had nothing, no use. So when I wrote my book, I basically explained how I analyzed my stocks. And what I do is, and yesterday I did a presentation here, people can watch it, VREC, it was how to get an edge. And what I found was that it's possible to get an edge. And people are really starting to like my style.
Everybody wants the edge
they like
now.
my style. And I say, if you don't have an edge, what are you doing? You're guessing? And I say I ask people, why do you own that stock? Well, somebody told me to buy it. No, that's not why you buy it. You buy it because you feel like you have an edge. And so I found that you can have an edge, and so everyone's different. So producers, I have a checklist of 10, and then developers, I have a checklist of 6, and then I have 2 rules for explorers. And so if you follow those, and for instance, like my developers have six items. If it doesn't have all 6, you pass, go to the next stock. But if it has all 6, then all you need is one variable, and that's the price of gold. So if the price of gold is important, then why are we using the current price? I'm buying this for the future. I'm not buying the stock to sell it tomorrow. I'm buying to sell in the future. So, and if the gold price is going to be important, so all we can do, we can speculate on the gold price. And today, people that are watching this today are very lucky because we're in a bull market. There's only been 2 bull markets, 1979, 80, 2009 to 2011, that's it. We've had 2. Now we're in another one, so the third one. And so when you're in a bull market, you can easily have an edge because if you can find quality companies that are undervalued, you only need that one variable. All you need is the gold and silver price to go up. And if it does go up, you're going to make money because these companies are highly leveraged to the gold and silver price. So ironically, I've always been attacked for using high gold and silver prices in the future. When my book came out, I don't know, 2010, 2011, I was using, I think, $2,000 gold, $100 silver initially, but I've always been using $100 silver. Now we're here. And people attacked me. Believe it or not, my numbers are too conservative now. Today, and right now on my website, I'm using $6,000 gold and $150 silver. And I constantly have to, and those are the numbers that I use to value the companies currently. So I use ratings, and they're all based on that. And so they're too low right now. $150 silver is too low, and $6,000 is too low. But I'm going to keep it there for a while. But I should be using, I think, 6,500, 175, maybe even 7,200. And if we hit 7,200, the stock drops are going to fly from here.
Well, it's really interesting seeing people who have had these high numbers like you probably feel vindicated right now. And so you're looking at higher targets. I think at this conference, there are people who are looking at raising their price targets, but there's a lot of talk about selling right now. Should I sell some stocks? Should I take profits in physical metal? So you, at this point, are you still holding on to what you have?
Yeah, I've been trying. I have a big follower on X. I have 80,000 followers, and I get that a lot. You know, people taking profits. And the reason why they're taking profits is because that's how people have been, you know, educated. That's kind of the norm. You know, you take your capital off, you take your profits whenever you have it. I'm a speculator. I'm in this for the prize. I remember. I don't sell. I remember I did it once and I learned a lesson. So I bought 10,000 shares of First Majestic Silver in 2009 at $1.15. And then I sold, when it got to $20, I was a 20 bagger, I sold 500 shares and got all my profit back, right? I had 9,500. Believe it or not, I was angry at myself. Because I was like, I want my shares back. Give me those 500 shares back I sold. To this day, I'm still, but luckily they acquired Gatos. And when they did that, my share total went up above 10,000. So I got them back that way. But I believe in the Peter Lynch style. Peter Lynch, who was the best investor of all time as far as records go. Nobody has a better record than Peter Lynch. Peter Lynch said his number one regret was selling early. Which was and so I'm not a believer. What Peter Lynch meant was that it's a mistake to take profits. And that's what I try to tell people. There's a smart time to buy and there's a smart time to sell. If you sell early, the only way that that's better is if you rotate it into something with more upside. But in my opinion, like those 500 shares of First Majestic, whatever I put them into, they're probably not going to do better than what First Majestic does by the time I sell it. So the key is, yeah, you can take profits only if you think you're going to rotate into something better, but you better be confident. But I do sell for instance, I bought SLV in I don't know, when it was at $11.75, it was under $12. It was physical paper silver. I always bought that paper silver because I knew silver was going to 100 or higher. So I'm like, okay, if that's a 5-bagger, I'll go ahead and buy some SLV. But I never really liked holding SLV as paper silver. But I always knew it's just, at a certain point, I'm going to sell that. So I sold it at 86. And I took that cash and I rolled it into two ETFs, two silver miner ETFs that I know have more upside. So if you're confident, so I'm very confident that those ETFs are going to do better than SLV from here forward. So I rotated them in. And I have a lot of PSLV, which is more paper silver. And I looked at it today and I'm going, oh my goodness, what am I going to rotate that into? So it makes sense to rotate when you're confident. If you're not confident, write it. But there's one other thing. I think it makes sense to ride some stocks to the top for certain reasons. For instance, if you're in a drill story, and you don't want to take profits too early. You want to wait until you think it's kind of at the top, and so those are ones that I think I rotate out of those the fastest. Once a drill story takes off, I'm like, okay, it doesn't have much more to go. I'm out. So I rotate out of drill stories quite a bit.
Okay, so it's really very individualized, and I like that you specify you have to know where you're going after. You've got to have a plan, and I think maybe that's a problem for people is they don't know what the next step for them will be.
Yeah.
I want to bring a question from one of our audience members. I think I was reaching out to see, does the audience have questions before we do all these interviews? Somebody had asked what silver stocks you currently see the most potential in. So I wonder if you can talk about that.
Well, the one thing about stocks with the most potential, you're talking about risk reward.
Yeah.
When you're going after 10 baggers, because that's basically the question you're asking, because
Yep.
there's a lot of them, they're never slam dunks. So you're gambling. So what I do, and I've been doing this for 20 years, is I want to have as many quality mid-tier producers I get my hands on, because those are your foundation. Those are the stocks that are going to work. They're going to participate. in a bull market. So you get that foundation, and the other foundation for me is mutual funds, ETFs, physical. You get the foundation set, then you can go after these 10 baggers. A lot of people will go after 10 baggers and ignore the foundation, and there's just a lot of risk in their portfolio. You want to get that risk out. You want to have a strong edge, if you will. I have a really strong edge because I built my portfolio that way. Now I go after the 10 baggers. So what are the really good high risk, high reward stocks out there right now? The one that I said that was really juicy a while earlier was Guanajuato silver, and everybody was selling it because they've been serial diluters. And I kept saying, you don't sell a 10 bagger until they dilute enough to where we don't have a 10 bagger anymore. You ride it, you hold it. And I think Guanajuato still has a ways to run here. And James Anderson, the CEO, he's a bit of a deal maker. I wasn't surprised when he just acquired Bolañitos. I think he'll do another one. I think he'll find a way to grow the company. And I think their dilution's now over. We're at $100 silver. I think they can probably grow organically, so I like that one. SilverX is another one that's kind of a twin of Guanajuato, but they only produce 1 million ounces now. But they have a lot of silver. They have 100 million ounces of silver. There's not a lot of companies out there that are producers with a lot of silvers. They have 100 million, plus they have 200 million silver equivalent, plus they're drilling, so it's going to grow. So they're going to get to like 250 million silver equivalent, maybe more. So SilverX, now with these high prices, that one is looking really, really good to me. I have a good position in it. I'm so excited. Well, I own everything. I have about 162 positions, I think, right now. The other one that I like a lot, that I think we're going to keep going and going, right, is Silver Storm. Silver Storm is getting ready to go into production here in first half of the year. They're going to mine 2.5 million ounce silver equivalent, and if they can generate, 50 million free cash flow, they can use that to advance their San Diego project. The San Diego project has 100 million ounces, so they're going to truck that over to the La Perla project. So they could easily get to 5, 6, 7, 8 million ounces a year. And so that one's really juicy. The other one I recently acquired was Silverco Mining. That one, I looked at it about a month ago. I think it was trading like $3, $4 Canadian. Now it's at 12. And when I first looked at it, some of the reasons why it ripped is because I looked at it and said I like it and I bought it. I got a lot of followers. So, I'm becoming the E.F. Hutton. Don speaks and people listen kind of thing. So I looked at Silverco and I said, wow, this looks fantastic. Basically, another near-term producer like Silverstorm, they bought a mine with a mill, and they're just going to put it back into production. And then they just acquired another project, Nuevo Silver, that has another mill. So Silverco. So I'll stop there.
Okay. No, fair enough. I think that's a great list, and thank you so much for sharing. And I do encourage people to go follow you on Twitter if they aren't already. So you're taking a look at new targets for gold and silver prices, and I want to go back to what's driving the metals higher, because I think in previous conversations that you've had with me, you've talked about how issues in the bond market are really what's happening there. So how are you seeing that continue to develop as we head into 2026?
So I believe that you should only invest in gold and silver mining stocks if you're a believer, a strong believer that gold's going higher and that you have a general understanding of why it's going higher. Otherwise, you don't have conviction. You need conviction because it's very volatile. I believe that this is all about gold. It's not about silver. Silver's just coming along for the ride. For instance, today, silver's been absolutely ripping, up 200% in 6 months. But look at gold. Gold's been ripping too. It hasn't just been silver. Gold is such a huge market compared to silver's tiny compared to gold. What's happened is silver's coming along for the ride, and as it's coming along for the ride from investors, there's not enough silver. And I always said this, there's going to be a shortage. My first book, when I wrote my book, I said, in that book in 2010, I said, there's going to be a shortage in silver. And now it's there. And the reason why you're going to get a shortage is because they only mine 800 million ounces a year. Fabricators need about 700 million. They need all of it. So where's the investors going to come from? All of the investor money, all that investor stuff, that's where you have your deficit. They think the deficit this year is going to be 300 million ounces, somewhere between 200 and 300 million. That's all from investors. So there's all the investor money for silver, that's all coming from an above ground inventory. And it's whittling away. The last 4 years, it's over 600 million ounces. And it's all investors. So they're just sucking it all up. So there's not enough. We're just running out. And we could be there in March. The COMEX, so far in January, 9,000 contracts. That's 45 million ounces of silver has been delivered in the month of January. January is not a major month. So March is looking like 75 million ounces. So we're running out of silver. But I haven't even answered your question yet.
Right.
The reason gold is going higher is there's only one reason. And it amazes me. I mean, that people don't talk about this. I talk about it over and over and over again. And it's because the mainstream media refuses to talk about it. And there's only, you have to go over to YouTube to learn anything about it. And I've said it over and over again. It's about the U.S. bond market. The reason gold is at $5,000 and going higher is because the U.S. bond market is fragile and becoming more fragile every day. But not only that is, I've said this, it's going to fail. And that's why gold keeps going higher and higher and higher, because the people that are in the know and the people that do the analysis see that what the U.S. economy and the U.S. government, the situation, what they've gotten themselves into, is that once you cross the Rubicon, there's no way back. And so we're borrowing not just $2 trillion. The $2 trillion is the budget deficit. That's the borrowing. But we're rolling over an ungodly amount of money. It's like $7 to $10 trillion on top of the two that they have to literally borrow. It's becoming a huge problem, and there's no, like I said, we crossed the Rubicon, there's no way back. That's the reason gold's going up, and that's the reason it's going higher. And I've been saying the winds that are back, 26 is going to be a great year because the winds that are back for gold, I don't see a scenario where gold doesn't go higher. And so silver's going to come along for the ride. Silver will be volatile, but we're in a buy the dip situation here. And it's all about the bond market, and Wall Street is in denial. They think that the U.S. economy is the juggernaut of the world, and it's going to continue to grow. And as long as the economy is growing, the bond market is going to be fine. The second, and I've been saying this, the second the S&P stops going up, you got a problem. And as Jim Rogers likes to say, I like these old guys that have been around a lot longer than me. They see it even, they have more conviction than me. Jim Rogers, he says that what's coming is going to be the worst economic problem in his lifetime. He's been adamant of saying that. And I agree with him completely. And he also says that nobody has fixed the business cycle. He goes, you think that the business cycle has been fixed and we're not going to have another recession? He goes, you better be very concerned, very worried. He'd like to use the word worried. You'd be very worried. Yeah, he's spot on. The business cycle hasn't been fixed. So when the stock market decides it's time, it's time. And we don't know what the bell's going to be, who's going to ring the bell. I think it's going to be this year. I really do. And this is what I call the fear trade. The last two times that gold miners did well was in a fear trade. It was the 1970s. The 1970s was a period where the stock market didn't do very well. We had two energy crises. People didn't want to own stocks. They didn't do well. That was a fear trade, so people bought stocks. The miners did unbelievably well because people are pivoting into places where they can make money. The other fear trade was the early 2000s, and then it lasted all the way to 2011. But we had the dot-com bubble pop, and people were like, the NASDAQ went down 50%. People, right? And the fear traders, I don't want to own stocks. And then you had 9/11 come right after that. So both bull markets, you had fear trades. We're going to have one here. That's what I'm waiting for. So that's the last battle. So the thing that's amazing is that the miners are cheap. We got the wind at our back at gold, and we still haven't even won the war yet. The final battle is the fear trade. So once the S&P stops going up, then the money starts rotating. There's $65 trillion in the U.S. stock market. That money's going to rotate out, and a lot of it's going to go into gold, into the miners. That's when we win the war. But the scary part is, I always knew this was the outcome, and I'm not happy about it. My portfolio is exploding, but I'm not happy because I know it's coming, and it's ugly, and it's going to have a good ending. But the next 10 years is not going to be any fun. And the reason why it's not going to be any fun is because our standard of living is going to go down. And once it starts down, it's not going to come back up. That's the scary part for me, because we're going to have to rebuild society. And it's anybody who has their eyes open can see that we're devolving. Things aren't getting better. It's pretty obvious. It's just like it just gets worse and worse and worse. We know it's going to something's got to give here, right? And I know, and that's where we're heading. And gold is really the canary that's is chirping and saying, "We're there, people. Get ready, get ready, get ready." And it's I think it's going to happen this year. I really do. In my newsletter, I write a newsletter, and I said that 2026 is the end of U.S. greatness. We will get to the end of this year, and we will realize that America's better days are done. And the sad thing is, many people will come to the conclusion that I've come to, that there's only one outcome here, which is the breakup of America. I don't see any other path. And I think it'll be very obvious, maybe not by the end of this year, but by the end of the decade, that I'm right.
Well, it certainly seems like things are coming to a head. The situation is developing kind of as people have been saying. I was told for years, we're going to have higher gold and silver prices, and you're probably going to not like what's going on in the world. So I can definitely see what you're saying there. And I think we have to wrap it up for today, and I'll send you back out onto the conference floor. But this was great, as always, and we'll make sure to catch up soon and see how this is developing.
Yeah, April.
April.
We were going to do one at PDAC, and I said, no, let's wait and do one in April. That's too close.
Yeah.
we need some oxygen, but yeah. So and then we'll let this economy marinate in the stock market and gold. I think mid-April. I think we'll have some. I think things will really be in motion. I think we'll have a really good idea by then of kind of where gold and silver are going the rest of the year, we'll have some more insights, so that'll be another good conversation. Always enjoy it, Charlotte. Thanks for having me on.
Me as well. All right, we'll see you in April. Thank you so much. And once again, I'm Charlotte McLeod with investingnews.com, and this is Don Durrett with goldstockdata.com.